PayPal reported quarterly financial results this morning, and the stock price is up over 8.2% following those results. Of course, I'm happy about that because I did a preview video reminding investors that I thought PayPal stock was a good value and I thought that it was a good buy going into these results. And I'm also happy because I own PayPal stock myself, so seeing the value rise in my portfolio brings a smile to my face, to be sure. So in this video, I'm going to review the company's latest results, the reasons why the stock price is up, and let you know what I think about the company after evaluating these new results. Let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so PayPal saying they delivered another strong quarter and they're raising their guidance as a result. They're also building for an agentic artificial intelligence future, partnering with leaders such as Google, OpenAI, and Perplexity, where people using those large language models can make a purchase using their PayPal checkout information without having to switch sites and platforms. And it all makes the transactions more seamless. And I've talked about how PayPal's competitive advantage comes when people are spending money online, not so much when people are spending money in person. And over the next few decades, I expect the percentage of spending moving online to continue increasing. Shopping online is just so much more convenient than shopping in person, and I don't expect anything will change that advantage. Some big picture highlights for PayPal. Third quarter net revenues increased by 7% to $8.4 billion. Its operating income increased by 9% to $1.5 billion. And if you divide the operating income with the net revenue, you will get the operating profit margin, which increased by 33 basis points to 18.1%. GAAP earnings per share increased by 32% to $1.30. Now, these are all solid numbers, but these numbers are magnified when you look at PayPal's valuation. So it all goes into context, right? When I'm evaluating a business, I'm looking at the valuation in relation to the performance. Now, if I'm looking at a business that's trading at a super premium valuation, something like where Palantir or Tesla stock is trading for, then I'm looking for everything to be perfect. I'm looking for very strong revenue growth, accelerating revenue growth, margins expanding much faster than revenue expanding, all of these things, a pristine balance sheet. I'm looking for clear perfection, right? And it's not unlike when you go shopping in a store. If you're shopping for a $20 shirt compared to when you're shopping for a $75 shirt, the implications are different, right? You might purchase a $20 shirt even if you don't really like the color. Whereas if you're going to buy a $75 shirt, it has to fit right. The color has to be good. You have to feel confident in how long that shirt will last you. All of the things have to be perfect for you to purchase the more expensive compared to the lower priced shirt. And I'm similar when I'm evaluating a business. And so these kinds of results from PayPal compared to its valuation are extremely attractive. And I'll talk more about the valuation here. PayPal is trading at a forward price to earnings of 13. This is the lowest the stock has traded for, going all the way back to 2019. There have been very brief moments where you've been able to buy this stock at a lower price, but those moments have been rare. Furthermore, it's trading at a forward price to earnings of 13. This is, let's say, it's 1/5 the valuation of SoFi stock. It's 1/20th the valuation of a company like Palantir or Tesla. It's 1/2 or roughly 1/2 or maybe 40% the value of the average stock in the S&P 500. So this is a cheap valuation regardless of how you measure valuation. I also measure valuation using a proprietary discounted cash flow model, and PayPal stock is trading at a market price of $76 even after this increase, and the intrinsic value per share I calculated is $133. So even in this valuation metric, PayPal stock looks cheap. So across the board, nearly every valuation metric I use and compare, PayPal stock looks cheap. And so when I'm looking at these kinds of performance results for a stock that this cheap, makes it a really attractive investment. Now, it's not all great news for PayPal. this one particular metric, they've now delivered 2 consecutive quarters of declines here, and I'm concerned about this. Payment transactions per active account on a trailing 12-month basis decreased by 6% to 57.6. Now, in the prior quarter, they reported a similar decline in this metric, and I'm concerned about declining usage from existing users that are maybe not finding as much value in PayPal as they were before. But back to more good news. Active accounts increased by 1% to 438 million year over year. On a sequential basis, they increased by 1.1% or by 300,000 to 438 million. So I'm glad to see this streak, and this has been several consecutive quarters now where they keep adding new active accounts. And anything positive is a good number for this active account feature when you compare it to the valuation. If it was trading at a more expensive valuation, then I would look for more meaningful growth in this metric. But at the current valuation, anything positive is good value for investors. Adjusted free cash flow came in at 2.3 billion, and this excludes the net timing impacts between the originating buy now pay later receivables and then selling those receivables to third parties. PayPal also announced the dividend today. They approved the initiation of a quarterly cash dividend, and it will be 14 cents per share on the company's common stock. So if you like dividends, PayPal issued and will continue reporting a dividend going forward. So the results have been better than expected so far this year, and PayPal is increasing their guidance in what they expect across the board, but more notably for earnings per share. They were previously expecting earnings per share at about $5 at the midpoint, between $4.90 and $5.05. They now expect between $5.11 and $5.15 at the midpoint for earnings per share. That would be a more than 25% increase of earnings per share from last year. And again, when you compare with the valuation, this is attractive. You rarely see companies trading at near single-digit forward PE ratios that are delivering above 25% earnings per share growth and close to double-digit revenue growth. So I guess from the tone of this report, you can see where I'm going with the recommendation, whether I think PayPal stock is still a buy. The answer is yes. I like the valuation here for PayPal long term. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.